Good afternoon, everyone. This is Brad Matheny. The markets close in just 10 minutes. This is the end of day wrap up of my SPY cycle patterns. Let's come over here and take a look at the SPY cycle patterns. Go right over here to this will work. The cycle pattern today was a bearish exhaustion in long-term bullish trending with explosive price activity and a short-term trend of a warning, meaning that the bulls had rolled over, giving way strength potentially to a bearish move. And we had the bearish daily bias and daily weekly bias. We were in trending mode. Now, everybody's been asking me if I think the CrowdStrike issue and President Biden potentially stepping down presented a bit of issue here. No, I mean, I really don't. Volume today has been stronger in the morning, then rolled weaker all day, built up a little bit of strength here. Now we're seeing a bit of a move to the downside. And generally, I did the midday video trying to show you guys the gap and how I measure support and resistance. So today I wanted to talk to you guys about this entire theory right here. Understanding A versus B structure. All of my research is done around the concept of what I expect to happen and then what I would consider failure if my research is not correct. So this morning, I'm going to show you here down here on maybe a 10-minute chart. This morning, I expected, and I'll go back to that screen or you can pause the video. I expected the markets to move upward off of a exhaustion move. So understand that, I came over here and I drew what I expected, which looks something like this. This is a brand new chart, so you can see it more clearly. Something of a move like this, trying to move back into this area here, okay, which aligned cleanly with this area. And again, I drew that just visually. So I need you to understand where we're at with this, okay? The way I saw that, the way I envisioned that on the chart is I used this Fibonacci system that I keep teaching you. You go down from the rejection point up here to the rejection point of yesterday's low, okay? And you come down into this area, and it's very clear that based on the pre-market opening data, we need to get above this level in order to see some upward trending, okay? And pre-market, if we do the same thing based on this standout high down to this low level, we need to get above the 382 to 50 level here in order to try to move higher. Now, it's very simple. I use these 382 and 50 levels as make or break kind of decision-making processes in terms of how the market is going to move. As long as we stayed below this level and this level up here, this is the intermediate short-term level, this is the longer-term level, reflects a big broad trend. As long as we stayed below these levels, then we're not going to see this move. We could have seen some sort of a sideways trend like this, or maybe what we saw all day long here was this deeper downward trend. But generally, in my case, a success would have been a rally up above, call it 554 and a quarter, 554.25 to, call it 555.25. That would have allowed enough downward pressure to diminish, equating to a potential uptrend momentum. So understand, A would have been seeing us get above this level, honestly, and we never did. So we moved into B, which is, oops, get rid of that. We moved into B, which is B failure. Price stays below 554.25. Showing bearish momentum is stronger. Oops, gotta break this up. So understand, there's really an A and a B level here. And the B level stayed in play all day today. Because we didn't get above this level, I'll make this a different color. Because we didn't get above this level all morning long, which I clearly highlighted in the morning video, generally, until we were able to get back above this level, nothing changes. We are still bearish. There is no upward momentum. So you would be generally down. Remember, price always attempts to move to higher highs or lower lows. So if it can't come up here and take out this level, it must always come down and try to take out a lower low. Notice how here it rolled up, it rolled down. It tried to take out a new high, couldn't do it. Tried to take out a new low, couldn't do it. Was reverted back into try to take out a high. It did. It took out this high. So now it's technically in an intermediate uptrend based on what we have on this chart right here, kind of moving a bit higher. And this is what I want to try to teach you is this. It's called Fibonacci price theory. Now, the A and B structure is not called Fibonacci price theory. But the actual concept I'm teaching you is called Fibonacci price theory. The purpose of this is to show you that price, I want you to start looking at my research in an A and B type of structure. Okay, now we're going to go do this in other data on this chart. Okay, so hypothetically, as you're looking through this data, it is pretty complex, but the first thing I want to teach you is this: how to use that Fibonacci system more effectively. So look, here's a great big uptrend. Okay, let's take a look at this big uptrend and look at it from a Fibonacci price theory. So we get down to this base. This was a big rollover on the end of June, rolling into beginning of July through the holiday weekend. This was the long trade that I called back at the beginning of July. Okay, so now we start to look for what are called standout highs and standout lows. Okay, and the reason why this was so important was because this was a standout high. Let me explain to you as I get rid of these messages why this is a standout high and this is a standout low. Because this is a high that's been reached that has not been reached within 15 to 20 bars. And this is a low that's been reached that has not been reached within 15 to 20 bars. Now, granted, there's a number of these lows. They must be in fractal formation that are reached that have not been reached in 15 or 20 bars. But as of today's open, this was the lowest low that qualified as what's called a unique low, and this was the highest high that qualified as a unique high. This does qualify as a unique high as well, but this is the ultimate high. Okay, that's the largest high or the highest high we've got since essentially changing trends. This is the new unique high, meaning it hasn't been touched in 15 or 20 bars. So this becomes an important level for resistance, which is why we then move the secondary Fibonacci system off of this unique high, not the ultimate high. So now when we come back over here to this move, let's take a look at where is our ultimate low. I'll draw it for you. Our ultimate low is right here. Get this out of the way. Our ultimate low is right here. And why is this the ultimate low? Because it is a unique low. Actually, looks like a double bottoming setup here. These lows have been set and they had not been touched within the last 15 to 20 bars. You can see that. But also, it is the lowest low, really kind of coincides with this. It goes all the way back, that we have seen since we started really moving into this new trend. Now, what makes this new trend valid? Okay, moving above this level, this ultimate high. It is an ultimate high because it's the highest high that's been reached that has not been touched in the last 15 or 20 bars. But we also have subsequent ultimate highs here that got taken out. And looks like we have another one right here. Okay, so now as we start to move into these ultimate high breakouts, this gives us pretty good confirmation. Here's another one, tiny little one. And then there's one more I just want to point out right here. They got broken as well. So now, as we start moving up, the way I do the Fibonacci work is I start from the ultimate low. So this is the ultimate low. And this is our ultimate high. These are unique lows and highs. Then there's little tinier ones called standout lows and highs. So in theory, folks, as soon as we start breaking above unique highs and lows, and looks like we do have another little one right here too, I start using the Fibonacci. And what I'll do is mentally, I'll start taking a look at this. And remember, we broke out of this range right here. Okay, that's really our breakout. That's where we start moving into new highs, right in this area. And I will start using this 382 to 50 area as a confirmation channel, expecting price to continue to move higher. So I will use this as a mechanism of price saying, once I get up in this area right here, I'll draw an arrow. So here was our confirmation of a close above. And once I get into that area here, I'm now looking at this area as confirmation. If this area gets breached, if price moves below this area, at this point, I'm no longer taking loss until or unless I get some specific setup. I'm no longer looking at this as a continuing trend. This is my failure. You have A above this level, and you have B below this level. You have success as long as we stay potentially above this level, and you have failure as long as we stay below this level. And failure would mean I would be looking for new triggers instead of looking for this bullish trigger to continue. So now let me move these out of the way. So A is up here, B is down here. And now look, guys, as we continue to move higher, I can just move, I can just move the Fibonacci level up as we continue to move higher. And all I have to do is just keep moving this level. So now I have A above this level, B below this level. And there's my A and B research. Now, as it continues to move higher, we move the levels up to here. You see how this automatically sets up a very solid level for control for A and B. And then, of course, we start to move higher here, and then higher here. And then eventually we clear the ultimate high and move up, let's call it to this level. Okay, now we've cleared the ultimate high. Now we're looking at something a little bit different. What's happening now is that we've made a very clear upward move, very solidly to break out, forming a new ultimate high. So now this becomes our new ultimate high, and then this, and then this, and then this, and then eventually this, and then this, and then this, and this, and this, and this, and then eventually this. Okay, so how are we going to protect ourselves against expectations? Let's say I told you that we were looking for a big reversal over here. Okay, well, let's assume that we got over into this day's high, and let's assume that we were looking for a major reversal. That reversal to the downside must take out this level. This becomes our major support within this trend. Now, alternatively, you would have secondary support coming from some intermediate level over here, and this would come from a what I call a predominant standout high or low. So now you look here. Here's a little standout low. This is a low that has been reached within the last 15 or 20 bars. Here's a low that has been reached in the last 15 or 20 bars. Here's a low that has been reached in the last 15 or 20 bars. And here's another one way down here. So what I look for, ladies and gentlemen, is I look for in a secondary move like this, I look for a standout low that is below my primary support channel. So it's either going to be this one potentially, or this one, or maybe this one or this one. I'm going to start with this one and come all the way up. And I'm going to say, okay, now my support channel is right here, 382 to 50. That's my intermediate support channel. And that again gives me a secondary. So we have the primary AB channel here and Control CV. We have the secondary AB channel here. And that gives me confirmation that a pullback of any major trend change, this is on a 10-minute chart, is not going to occur until I get below these two support levels. So now, so we could, if I warned that there was a pullback occurring here, we would want to see something happen. Now look at what happened as we move forward. I'm going to show this to you. So we take a look at the larger cycle trend. This is the shorter term cycle trend. I'll move that. We go up to the larger cycle trend up to this area. That moves our Fibonacci support level from here to here. That moves our AB. Whoop. That moves our AB structure here and here. Now this is a big move up to here. And if I carry this all the way up, which I would, because remember, I'm mapping it to the most recent price. Now I want to try to find a standout low that operates below this level, this middle green, bigger green level. And I'm going to do that by possibly moving up to here or maybe into here, which would be the lower, the green level. Okay, this is below the green level. Let me move this out of the way. You see how this level, this standout low, is below my 382 to 50 support level. So that then moves my 382 support level to 50 level here. And look at this, okay? Look at how cleanly this then aligns with this rejection. You see how it comes down here? We get this pullback. We move into this area here, would be considered, so I'll draw it, but this area here would be considered like a nebulous. It's potentially a downward trend setting up, but we won't have any real confirmation until we get below this level. So this is neutral trending, still bullish. Why? Because we're above this level. Remember, this is our failure level on a short-term basis. This is our AB failure level on a long-term basis. So short-term, we moved into neutral, bearish trending down here in this area. Long-term, we stayed very much in a bullish trending environment. That means that we're still long-term in an uptrend because we're above this level right here. Short-term, we're in a neutral, bearish trend. We're seeing a fairly solid pullback. And now remember, you can do this type of work anywhere off of any of these daily lows. I mean, I can come from here to here, do the same thing. I can come in here, highlight this 382 to 50 level, and basically say, look, that is my line in the sand. Bullish above this level, bearish below this level. Okay, very clean and simple to do once you learn this. So now as we move forward, we come back up over here. This is the short term. I'll move it out of the way. We come back up to this high and then eventually this high back over here. You've all seen where that high price level is, but let's do the math. Let's drag this up to the 382 to 50 level, which is right here. And again, we have our A and our B scenario right here. Let's then move the intermediate short-term level up to this closing price level. And then let's try to find where we would move our standout low. We either have it here or here. You know, technically where we're at's pretty solid, but let's just move it up to the tightest level. Give you guys an example. Let me try to move it up. 382 to 50. And now if we drag this out across here and across here, remember this was our blue neutral level. I'll move that out of the way and I'll just leave it here. This is our blue neutral level. Okay, here we go. So we move into the breakdown pattern, the bearish exhaustion. It moves below this level, short intermediate term. We're below this level. Here's our A, here's our B, here's our long-term level, A and B. So as soon as we get below this level here, 559.05, we're technically bearish. In short to intermediate term, attempting, remember, price is always trying to reach new highs or new lows. So we get down into this level, we've cleared this low, this low. We're going to come back here and probably touch this. That's the next major low. And sure enough, that's exactly what it did. Came right back into this zone. As soon as we got into this zone, now our long-term trend is at risk. We were long-term bullish up in this area and short-term bullish. Then we got below the level here. We're at short-term, intermediate term, neutral, bearish. And now we're long-term bullish right here. This then moves into our trend zone. And below it, this turns us into long-term bearish, short-term bearish. We're in a downward trend. Now we can start doing our own Fibonacci levels to the downside, which we've done. And we have been long-term bearish all day. So today, long-term, from the beginning of the market, we have technically been long-term bearish all day. And that's why I was suggesting until we get above this level, we're not going to see any bullish trending. It's very, very clean this way. I don't have to guess at where the market price is going to move. And again, if you're confused, go back and take a look at the beginning of this video where I drew this downtrend and why this red level was so important. I'm showing you now how we played the uptrend before and how we looked at the two levels while this downturn was taking place. Yeah, it broke through this level very cleanly at the open of trading on the 17th, just 2 days ago. And that put us into neutral downward bias because we had broken through the short-term support. Once we got through the long-term support right here, this was deeper downward trending. And you remember, I started telling everyone that we would likely go bearish in this area, telling you, look out, it's going to go down. Now, today, I told you, look out, it's probably going to go up. And what we're going to likely see, just so you know, is we are likely going to see a move back into consolidation. We've established a big, broad range. You can see here, we've established a big, broad range. In this channel, we are likely going to move into some form of consolidation across this channel. I'll drag this out and possibly move this out of the way across this area here from this high, maybe down into this area. And we're going to move probably into sideways flagging like this, ending in some sort of an uptrend. I still believe we're going to see some sort of uptrend. So be aware. All of my research is designed to teach you an A and B mechanism. So when what I expect to happen doesn't work, we have an alternate B side that we can still trade. And that's why you need to be aware, as I've gotten a lot of questions. Brad, are you still bullish? Brad, are you still bullish? Long term, yeah. I think we're going to move into this sideways trending and move higher because that's what the cycle pattern suggests. Okay. And that's what my research and my expectations suggest. But as long as we're below these levels and not trending above these upper levels like I expected today, no, we're not going to see bullish trending. We're not, in other words, don't be trying to buy into this expecting it's going to go straight up until we get, as I stated, until we get some sort of, I'm sorry, that keeps popping up, until we get some sort of movement up into this area, which is now lower. I'm going to show you this because this is where we're at as of today. The market's just ended. Let's take a look at where we're at. We push our Fibonacci levels down to the lowest levels here and push our Fibonacci levels down to the lowest levels here. Now we can move this downward trending Fibonacci into, let's see, 38250, 38250 right in this area. Sorry, I had to look for it. And then let's make sure where we're at with that. That's coming right up to there. But let's move the bigger, broader channel down. This is the bigger, broader channel. So 382 to 50, 382 to 50. Yep, that is correct. 382 to 50. Just wanted to make sure that I had it correct. Okay, so here's our inverted channels. There's the one, the lower one. There's the upper one. Now, this lower one is based off of this unique high. That's the only unique high we have. And again, back over here, would typically want it off of a unique high as well. We didn't get a unique high in this instance. We did way back here, but not all the way up. So when you don't have a clear standout unique high, which we did get, looks like back over here, then you have to pick standout highs that are relative. So understand, it's all about picking the most relative highs and lows. Now, do we have a unique high here? No. Do we have a unique high here? No. So right now, I'm looking for 552.5 to 553.75 as my upward trend. That's how I'm looking at where I'm going to see some upward movement. And that's likely going to continue to play all the way out through this flag. Okay, so as you can see, we're not likely going to see any big trending here. We're going to probably just flag out right between these levels. And now notice how interesting it is that these levels are still technically in play coming all the way out because these are support. We are above this 556.25 level, really, 556.5, we have very strong support back to the upside. And below this 554 level, we have very strong resistance, downward pressure to the downside. So again, we picked levels that make it very, very clear. We have very strong upward potential trending in this area, and we have very strong downward potential trending in this area. Okay. It's all mathematics and it all comes from price. So I'm trying to teach you guys how to understand price more efficiently and how to understand my analysis. Please leave your comments. Let me know what you think. Remember, I just digested and structured the last 20 days of trending using basic Fibonacci price theory. And I want to know, do you guys understand this? Can you guys see it? Does it make sense to you? And again, there's even more minor details. I can go down into a 1 minute or a 3 minute and do the exact same thing and get the more minute details. But this is just a 10 minutes showing you how it works so you can get an idea of it. Okay, guys, have a great weekend. I'm going to be working on my content. And we had a great week overall. Love the comments. Everybody's telling me how they love this. I think you just need to learn a little bit about my psyche and how it works, how I work, and how I present everything. Okay, guys, talk to you later. Bye.